Aloha everyone, Joshua Hayes at BigWaveTrading.com. Quad witching went out with a bang as the market had a nice little surge into the end of the day. And I got to be honest with you, when I look at this QQQ chart from the March lows to where we're at now, I can't be that mad at it. Looks pretty good. We still don't have a tried and true follow through day. I called this day here a half follow through day. Actually, it was this day right here, half follow through day based on the way that it closed. But still, I'm looking for a real follow through day. And I'm thinking I could get it. I don't know, man. It just seems like everybody's way too bearish out there. There's more bears than bulls in the AAII 4 weeks in a row. The only other time that's ever happened, guys, was at the bottom in 2009. So keep that in mind. There's more bears than bulls in the II. My biggest issue, why I still think if we have another leg down, I welcome it, especially for my long term portfolio, is that we didn't get any real fear in the VIX and we didn't get any real fear in the put call. Like these spikes right here, this is indicating to me of fear and panic. This was a slow grind higher, so I didn't see it here on the VIX. Put call ratio never did spike and close above 1. It got up to 0.95, I think, on a closing basis. Never spiked above 1, so I don't see it there. But if we're looking, at a potential besides one more leg down, at max, I'm thinking a 10-15% correction. Guys, at the very beginning of the year, I thought I was looking for a 10% correction in the overall market, and I believe it was right here, January the 21st, when I posted I expect a 10% correction this year from the highs to the lows in the S&P 500. We got that 10% correction. Could it extend to 15% down? Sure. But a cyclical or especially secular 20% correction, I just don't see it happening. I think this tariff news is noise. I could be wrong. I welcome being wrong. But when I look at high yield credit spreads, they started to really widen out in 2000 to 2002, in 2007 to 2009, and even during COVID crisis, they really widened out. We don't see really any of that. I mean, they're ticking higher, but there isn't that, uh-oh, something's wrong with the system. Look to the credit spreads. And when I look at HYG and J&K, J&K is a little bit weaker, but these still overall to me look healthy. HYG, if HYG was under the bottom line here, the 500 EMA, the 200 SMA, and just completely rolling over on heavy volume, I would be way more concerned about this market. But it's hard for me to be concerned whenever I've been looking for this 10% pull since the start of the year. I'll remind everybody, I actually purchased stocks in my long term portfolio, not this Friday or last Friday, I think, but the Friday before. I think it was right here, if I remember right. Right here. I bought 10 stocks in the long term portfolio. Still way okay with that. Nibbled. Planning to do much bigger purchases if we come down further. Demographics is everything to me, and that's bullish for at least another 10 years. Quantitative easing versus quantitative tightening. Last time I sold stocks in my long-term portfolio, which was posted to everybody, members in the chat room as I was doing it, was in 2021. Started sometime around October, finished it by the start of 2022. Then we had the pullback, and I started to buy stocks on the way down here. And I didn't predict, because you never know, but based on market history and not thinking this is a secular bear market, I said that the bottom would be 350, where I'm going all in on a closing basis. Unfortunately, we got to 348.11 intraday. Nothing I could do about that. But then as the market climbed higher, I expected us to go lower. We didn't. Did I fight it? No. I bought stocks. We still have quantitative tightening. That is going away. Poly market has a 100% odds in place that quantitative tightening ends in May and that we switch to quantitative easing. The Fed is indicating more rate cuts coming up. So we don't have rate hikes. We don't have quantitative tightening. We knew here they were going to do quantitative tightening and they were hiking rates. That's the only time you're going to see me sell stocks in my long-term portfolio, when everything is lined up in the credit markets and with the overall money flow. As long as the money is going to be easy, eventually it makes its way into the system. So I just can't be super, super bearish here. Not with rate cuts ahead, not with quantitative easing ahead, not with the high yield bonds looking fine, not with the credit markets looking fine. To me, it's all noise, noise, noise. So with that being said, today, excellent end of day rally. I'm still looking for a bona fide, tried and true follow through day. We have not seen that yet in the market, but I tell you what, for at least a tradable bounce to new highs, I don't know, maybe a V ramp to new highs. I don't see what's out of the question. I'm sticking my neck out there. I still think we hit all-time highs before the end of the year. So whatever pullback we have, I think it's just a blip in the radar. We go to new highs later on. So I'm putting my neck out there. I'm letting you guys know exactly what I'm thinking and what I'm doing. And on top of that, after today's session, I do have one new swing long position that we'll go over here in a minute. But I also look at the amount of end of day sell signals I have. And today I only have one, and it's a 50%er because of that tail and how well above the 200 SMA and this price low that it still is. But MLI is a 50% sell signal on an end of day basis. This was the long signal here. Got triggered and filled into the trade back here on an end of day basis now. 35% gain on a 50% end of day sell signal. That was my only sell signal today. So I take everything that I've talked about. I take that this was my only 50% end of day sell signal, 100% sell signals. And I want you guys to look at these charts. I'm going to go through every single chart that I just find interesting after today's session. TPR, which is Coach, which is in my long-term portfolio, kind of looks like it's trying to work on a bottom there. And what an amazing volume surge today. I know it's not the sector that we want to see leading, but there's BMY near highs, looking good. You want a retail stock, EZPW, near all-time highs as a retail stock in this market. How about Take-Two Interactive, a stock I like a lot? That's within hairs of new highs. Look at the relative strength line. It's a computer software stock. That looks good to me. I can't spin that bearish at all. It would have to have a surprise catalyst event to the downside. TDY, right off the uptrending 50 SMA. Of course, it's insurance stocks. We don't like to see it, but you know what? I just looked at everything. I have insurance basically on everything. Um, my, my premiums have gone up so much on everything. Car insurance, home insurance, pet insurance. You name the kind of truck insurance. You name the kind of insurance that I have. It's significantly higher. Medical insurance, my premiums are much higher. So this is a growth industry to me. So when I look at Goosehead and I look at that chart, I can't spin that bearish. And then of course there's other names. Fox A. Well, we'll just do Fox. Look at that right off the 50 SMA. RPRX in the pharmaceutical biotech area. How about a stock that's been selling off a lot lately? SPSC. Look at that volume. Kind of looks like it's trying to hammer out a low. Another name that's trying to do the same thing. Look at the volume surge today. Plus, this is just stocks of interest, things that I noticed in my scans that I really haven't noticed before. AKRO, pocket pivot point signal right off the 50 SMA, kind of has a similar look to DOX. It's hard to say that that looks bearish. FSFG, looks like that's rounding out to me. HIMS, kind of looks like it's trying to round out. PLTR, kind of looks like it's rounding out. These could all fail. Microsoft, right off the 500 EMA. TDUP, right off the 50 SMA. Retail stock also, by the way. So it's not perfect. It's not exactly the names that you might want to see, but this is new leadership. This is what happens. New things come to the forefront, and they don't look that bad to me, like CRMD. Looks like they're all forming bases, every single one. And then another stock hitting new highs today, Sony, new highs. It's just hard to be super bearish here, guys. That's all I'm trying to say. So I do have one new swing position this evening. One swing position filled today. 10% of my account capital is in it. It finished higher on the day. I'm taking some profits. One new trade setup failed its setup, LIF. The buy was with a move above 4170. No trigger, no fill, no losses. The gap down prevents the fill on the upside, how we always trade. The close below this low voids this trade. So this was a new trade yesterday, but after today's price action, the trade is canceled and voided. I have zero interest in getting long LIF anymore. So that trade is out the window. So that's what could happen. But Pierce, almost gave the ticker that filled. That's for members only. So anyway, this is the new long position, EQH. So what do I have here? EQH is financial services stock. According to FinViz, sales growth in the most recent quarter is over 100%. According to Market Surge, it's over 65%. What I like most about this chart is all in the bottom panel, and it means nothing to me at the same time. Price is all that matters. Price is all that affects my P&L. But what I like about this chart a lot, I have a lot of pocket pivot point signals in here, a lot of tall green volume bars, and no red tall volume bars since this move started with this gap up. I have a very strong relative strength line. It's at the upper right after starting from the lower left, and I don't see any red balance of power in this chart whatsoever. Now, you could calculate your size and risk to this low or this low. If I did that, I would be able to get 20% plus of my account capital into this one trade. However, I'm going to calculate my size and risk to this low, so I don't believe this will be more than 5% of my total account in this trade with a 1% total account capital at risk to this low. But I got a bullish hammer reversal candle here, attempting to get back above the 50 SMA, which it is above the 50 EMA. I got that volume truncation, I got that BOP surge, and I got that strong relative strength to the pocket pivot point signal. All of these variables go into the equation of, do I take this trade long? Yes, but the only thing that truly matters to me is one thing, price. Everything else that I'm discussing is secondary, tertiary, quaternary. This is all that matters. I want to get long about 52.60 at 52.61. I don't want to pay more than $53 per share for this trade, and this will be my final stop. All right, everybody, let me know. Do you think I'm crazy that I think that the market's going to hit new highs by the end of the year, that I don't think that we're going to have a recession? Let me know in the comment section below.